Hi, today is Sunday the 13th, I believe, and this is a short weekly recap for current trades. We start with December. December should have been closed, but if you have watched previous week's videos, I overhedged before the elections, so I had to drop my hedge, which were below 3,000, and then I raised the expiration line to at least reach break even. And there's nothing much I will do to this trade. I've said that for a while. No need to have a look at the trading log. I've got absolutely nothing to this trade. And at this point, the only thing we can do is wait. The CCS over there is no longer quoted, and there's too little here. Unless we roll this little peak up there, I mean, we can do that for maybe 20, 30, maybe $50, but I'm not going to bother about it. So this trade will expire worthless, maybe, well, $9, nothing. And that's exactly what I had in mind. And when you have a trading style and when you have an objective, it's better to stick to it. So for this trade, nothing until Thursday. The only weakness is that we are blocking $12.5K into margin, and that has kind of hampered the development of later cycles. So of course, we could maybe close it sometime this week for minus $20, $30 and reallocate capital. That may happen if we have strong vol pop, a market dropping below 3,600. That would really justify reallocating capital. Otherwise, I'll wait for another few days. Okay, now let's have a look at January. January has also suffered from these elections. I also had a hedge even lower on 2,700, which I finally dropped this week. And now the matter is to raise the expiration line. It is not a typical Rhino, but we were until October in a high volatility situation where I decided to have my combos down below further OTM than I would usually do. If the volatility goes back to normal, the Rhinos will go closer. I mean, this is not a trade at inception, but the broken butterflies will gradually be closer to the money. So on this trade, we only have about $300 potential profit here, all the way to 39.75. So it's going to be micro adjustments. I have about 5K left available, so I could even do that before December expires. So I was thinking of maybe adding a narrower broken butterfly somewhere around here. This one would add about 2.5. As you can see, we can get almost $100 here if we add a CCS here to keep delta slightly negative and keep the Vega distribution fairly stable across the range. That's something that is definitely worth looking at. So this is something I can do even without waiting. But at the same time, we are now approaching the last month of the trade, and generally the period which I call cruising altitude between, let's say, 56, sometimes down to 49, to the last month, 28, is a cruising altitude when you can add, remove. I mean, you balance your Greeks and you don't add much because the capital accumulation into the trade is mostly during takeoff, 77 to, as I said, 56, 49 DT. As you can see, I mean, this cruising altitude has been really low altitude. I mean, we have not used much capital. In a way, this cycle is suffering by the lack of capital put into this trade. Secondly, by having the trade placed further OTM, we don't have much theta. Generally, with a more ATM type of trade, we have more theta. So this trade is not going to be fantastic, but I still hope to get maybe 1.5% in the last month of the trade. So nothing much to do. I'm very happy to have finally dropped the lower hedge. As you can see on this trade, I dropped it 27.50, 27.75, 26.50, 28.50. So this is the bottom hedge that I managed to cancel. And on Friday, I added a CCS, just a small one, just to keep the delta flattened, just in case we would have a little bit of a drop at the opening on Monday. Okay, so that's a simple trade, no real stress. Let's not forget that we have 2 weeks of pretty much dull trading. There will be large institutions recalibrating, a bit of window dressing, And also we have some sector rotation going on. So I don't think there will be a major shift in the market. But that said, it can happen because low trading volumes generally keeps the water fairly calm, but it can also exacerbate larger moves. So I want to have a trade that does not require adjustments for about 2 weeks starting end of the week. Lastly, February. February, I started this week with two broken butterflies, which were admittedly a little bit OTM. And the reason is that we had IV below HV, historical volatility, and now we're going back to a more normal setup. So this is looking better. So maybe I entered a little bit too early, but we know that naturally markets overprice their margins. So when you sell Vega and you're theta positive, you just want to make sure that your IV is above HV. We had a period where it was not that great, and now it's looking a little bit better. So this trade started with a slightly smaller, only two broken butterflies around 31.25, 30. We started with 31.25, 32.20, 32.50. So it was again a wider broken butterfly, and it was slightly out of the money where I would get more volatility considering the IV versus HV situation. And it was two broken butterflies instead of three. The main reason is that capital was getting a little tight with December still being on at this time. So let's have a look at the trade log again. Then I added a CCS because it looked like we had volatility holding up when the market was bouncing off lows. So it was actually a good price, good opportunity to add a CCS and add a little bit more negative delta. And on Thursday, I added another two broken butterflies. And this time it was 32.50, 32.50, 34.25. So back to high 75. This is more or less a full size position at 68, 70 DTE, which is good, but I intend putting a little bit more on this trade. We are using 10K. January is suffering, and as I said, it's not really a time to add much more to January now in the final month, unless I find a very stable configuration to keep the trade basically adjustment free until early January. I would rather concentrate on February. And this time I may go up to 6. I may add another 2 during the takeoff period for the next week or so. Again, I don't think I will add more between the 20th to early January. So this trade is looking good. I mean, at takeoff, the upper expression line is already close to 0. So this trade has a better chance to be doing well. Of course, it would be nice if the market could retrace 3 to 4%. As we have seen, we must first see whether 3600, which is likely to be tested soon, is broken. And then we could move from a bearish congestion to a more bearish tone to the trade. And that would be unusual in this period of Christmas rally, recalibration, window dressing, sector rotation. So unless a major sell-off on techs, and if small caps take a knock after the strong rally that they've had, I would say the market will definitely stay north of these upper longs here. Okay, as I said, there's not much to say this time, so I will leave it here. Maybe before closing, let's have a look at the stats on SPX. So we have here, sorry, this is the wrong spreadsheet. We have a correlation VIX SPX, which is minus 80%. This is pretty good. Covariance has gone back to normal level. A normal level. We are now down to minus 53, which is looking a lot better. So we did have, because we had some abnormality here, which has not translated into a major change in market tone, or maybe this is still to come. So false alert here, correlation, as you can see, still pretty good, minus 80%. So the long-term average is here maybe around minus 76, 75. So nothing major to report here. So this is pretty good. We have a strong anti-correlation, covariance not playing out. We can, as I've done now for January, we'll try and do more also for February. We can spread out the Vega risk across the chain under our wider 10. Okay, that is it for now. Thank you for watching. I will be less available this week because I'm traveling ahead of the festive season, but I will be always available on Slack. Thank you for watching and bye for now.